Hey everybody, this is Jim at SP500chart.com. I'm coming to you about an hour and a half before the close because I've got to leave out of here just a few minutes after 4 and I won't be getting back till fairly late this evening. So I'm going to do another one of these where, frankly, what's a good way to put this? I don't think anything is going to change in the next 90 minutes. And if it does, then when you finish viewing this video, you will have a reinforced idea about what that might mean. So, before we take a look at the chart, I want to remind you that the website and this video are for educational purposes only, and nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am still not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, starting out here on a 30-minute chart. Here is our little blue channel that we've been looking at. And we got a little dip underneath this support line to start the day off, but quickly recovered, got back into this channel. And I want to show you something that's kind of interesting. And again, I don't want to read too much into what I'm going to show you here, because it could be totally out to lunch. We won't know quite yet. But a while back, we'd put this line on the chart, and I said, look for the possibility that we could, instead of staying in this channel between these two teal-colored lines. Actually, that color is cyan, C-Y-A-N, but most people don't know cyan from a hole in the ground. Not to call any of your intellects into question. Photographers know cyan, and I'm a professional photographer, so I know the word. But the idea being that we go up in this channel for a number of days, a very aggressive move upwards, and then we break. But instead of coming down for a reversal, we break and just go sideways for a bit. Now, if I already snapped the parallel line. There it is. We snap our parallel line and then put it back at our lows back here from the 20th of May and slide this thing on up. I just think it's interesting that this is about where we hit this morning. So, without any question, I don't think anyone could look at the trading since the 20th of May and say that this hasn't been anything but very strong. And it will be interesting to see what happens if this move upwards stays in this larger parallel channel. You know, I mean, that almost seems too good to be true, to be honest with you. But it's worth keeping an eye on just the same. So a quick recovery back into this little blue channel here, which means could we be looking at an aggressive leg up, and then instead of sideways, we actually go sideways with an upwards bias. And if that is the case, and we're going to tag this line again, then this market is going to have some serious giddy up and go. It has to, because we have a resistance line right here, and we have our little maybe support line right here. It will be very interesting to see what happens by the end of this week, because these two lines, now this one I know is technically significant, okay? This one, the jury's out on. But clearly there's a meeting of these two lines scheduled for about 2:30 on Friday afternoon, June 6th. So this will just be real interesting to see what happens. This market has now, I believe, I don't think we're going to close under 1904 today. So this marks the day 1, 2, 3, 4, 5, 6, 7 being over our neckline. And I'll remind you that our neckline of that large, fairly large inverted head and shoulders pattern, we got to go out to a 2-hour chart to get it all in, here it is. Left shoulder, head, right shoulder. This would be a continuation pattern. And the target we get from that is all the way up to right about 1990. So let's just zoom in one more time, looking at things on a 5-minute chart. You know, it just looks like fairly typical behavior. Every little dip so far has been met with buying. So let's see if the past 3 days, see if we draw a little, there we go. If we draw a rectangle here, you could almost make the point that we had our move up and then 3 days of sideways, where we moved from the top range of this rising channel to spending more time near the bottom. And now it looks like we may be breaking out of this little 3-day range right here. It's just all very interesting to see. So guys, let's keep our fingers crossed. This could be resistance. If it is, remember the rules for buying, for trading an inverted head and shoulders pattern. If this line gets tagged, that is a textbook level to go long. If we extend on out for a number of days, then hit this line, that is a textbook level to go long. This green line right here. Or if we come to the end of our breakout move and then we get a 40% retracement from the lower point of our right shoulder to wherever that breakout move ends, that also is a textbook place to go long. Let's pretend like this is the end of our breakout move, the highs we saw today. Let me just show you what that means. Using our fib retracement, we go to the bottom of this, the bottom of the right shoulder, go to where we have our high of the day at about 1927, and interesting to note that 40%, actually, if we're using fibs, we go 38.2, lines up almost exactly with that neckline. So the moral of the story would be is if we get weakness and we see some days of selling, a return to either this line or this line, whichever would happen first, probably this one if we get it. That would be a spot to enter a textbook long position in the S&P. So guys, there's your video for June 4th, 2014. Keeping my fingers crossed that we don't have a sudden 30-point crash and end up under 1904. I don't think that's going to happen. But hey, thanks for watching. Take care.